Hi friends, welcome to Ask Investment Academy YouTube channel. One of my YouTube subscriber asked me to explain about FII and DII analysis and its impact on the stock market movement. Generally, most of the people will show a lot of interest on the strategies and technical analysis, but FII and DII data analysis is also very important in analyzing the future stock market trend. FIIs means foreign institutional investors like asset management companies in other countries. These FIIs may offer mutual funds, insurances, pension funds, or it can be investment banks in the other countries. These FIIs will buy Indian stocks for investment purpose and distribute the profits generated due to appreciation in the stock prices to the people in their own countries. In developing countries and the developing economies, FIIs are important source of capital. Some developing nations like India have framed some rules and restrictions on total value of assets that one FII can purchase and the number of equity shares that one FII can buy in the particular single company. FIIs have high quality research professionals who can forecast the economy of the country which they are going to invest. They will assess the geopolitical situations also. If FIIs forecast the high growth potential in Indian economy compared to other developed countries, then they will show huge interest in investing their money in Indian stock market. All the FIIs who wants to invest in the Indian stocks has to register with SEBI. I will give small example here to understand the FII's role. Assume if a mutual fund in USA forecast a high growth potential investment opportunity in Indian company, it can buy the shares of that company. This procedure also helps the US retail investors who may not able to buy Indian stocks directly. So they can invest in the mutual fund offered by that FIIs and they can take part in the high growth potential and they can also earn profits. Now you got idea about the FII. Now you have to understand the domestic institutional investors. FIIs are foreign institutional investors and DIIs are domestic institutional investors. All Indian banks, financial companies, asset management companies who offers mutual funds, pension funds, insurances are comes under domestic institutional investors, shortly DIIs. Generally, FIIs have more capital and more powerful in Indian market compared to DIIs and retail investors. Those FIIs and DIIs are institutes with high qualified research team who has the good knowledge of market scenarios, stocks technicals and fundamental analysis. Retail investors are like small fishes in the ocean. So if FIIs and DIIs are bullish, and ending a day with huge buying, don't dare to stay in the bearish trend. Almost 90% of the days, FIIs and DIIs combined activity decides the market direction. Shortly, I will give some of the examples to support this statement using the past data. If FIIs and DIIs are the net buyers, that means if FIIs do net buying on the particular day, then market will end positive. If FIIs do net selling on a particular day, then market will fall. Generally, there will be a close fight between the FIIs and DIIs. Most of the time, they will end in opposite direction. DIIs will try to book profits partially when FIIs move the market so much in the upside direction. When both FIIs and DIIs does net buying, then market will increase hugely. When both FIIs and DIIs does net selling, then market will decrease hugely. If FIIs and DIIs are in the opposite direction, then combined buying or combined selling will decide the market movement on that day. When anyone's net selling is more than the other net buying, then market will fall. If anyone's net buying is more compared to other net selling, then market will increase. And the same trend might continue for the next few days, so that you can able to predict how the market is going to move in near future. Say for example, next 2 or 3 days or next 1 week. You can get FIIs and DIIs data either from NSE India website or from Money Control website. Once you open FII and DII data, you can able to see here whatever FIIs and DIIs net buying or net selling in the cash segment. Only cash segment will decide the future movement of the stock market. FNOs will have very less importance. See here, as per the FIIs data, on March 1st, FIIs has done net buying of 125 crores and DIIs has done net selling of 194 crores. So what is the net selling here? Around 69 crores is the net selling of the FIIs and DIIs. So you see on the March 1st how market has moved. So this is the Nifty chart. We are seeing the Nifty chart from February 12th. On March 1st, there is a net selling of around 69 crores. So 69 crores is very minimal. So stock market has increased a little bit. So March 2nd, you see what has happened. March 2nd, FIIs has done a net buying of 2223 crores. DIIs has sold around 854 crores. So here there is a net buying of around 1400 crores. So since there is a net buying of 1400 crores, market has increased so much. It has almost increased by 150 points on March 2nd. Then you see on the March 3rd, FIIs bought for 2000 crores and DIIs also bought for almost 400 crores. So total it is around 2480 crores. 2480 crores means, so it is a huge buying. So market has increased by almost 2.5%. Next you see on March 4th. March 4th, both FIIs and DIIs has sold. So it acts as a trend reversal indicator. FIIs has sold around 223 crores and DIIs sold around 788 crores. Since they have sold that much quantity of shares, market has increased so much in the initial point of the day and again it has decreased from the high value. And next you see on March 5th, FIA sold for 2000 crores and DIA is also sold for 1191 crores. So total it is 3200 crores of selling. So due to that much selling, the market has decreased. Now we will see the past data in the month of February. So in order to see the past data in the month of February, just click on the February 2021. You can able to see how the FII and DII trading activity. We will try to observe from February 15th. February 15th, you just try to observe FIIs has bought for 1234 crores and DII sold for 1048 crores. So total it is around 180 crores net buying. So since there is a 180 crores of net buying on February 15th, stock market has increased very small quantity. After that you see on February 16th, there is a net buying from FIIs of 1144 crores. On February 16th, there is a net selling of combined FII and DII. How much there is a net selling? Around 400 crores. So since there is a net selling of 400 crores, market has decreased so much. On February 17th, both FIIs and DIIs combined trading activity is around 280 crores net selling. Since there is a 280 crores of net selling, the market has decreased. On February 18th, there is a net selling of around 300 crores. Due to that, market has increased so much compared to earlier February 16th and February 17th. Next, on February 19th, you just try to observe, since there is a net selling of 900 crores from both FIIs and DIIs, market has fallen hugely. Here, there is a net selling of 893 crores from FIIs and 919 crores from the DIIs. So total, there is a net selling of 1800 crores, which is very huge. That's why market has fallen hugely on February 22nd. FIIs has the more ability to decide the market movement compared to DIIs. Due to that reason, if FIIs are selling very hugely compared to the buying of the DIIs, then market will fall very huge. On February 23rd, FIIs sold for 1569 crores and DIIs bought for 216 crores. So here what is the net selling here? 1300 crores. This 1300 crores, it is less compared to 1800 crores here. So amount of the fall which is happened on February 23rd is less compared to February 22nd. Next, on February 24th, FIS has done huge buying. 28,000 crores huge buying it has done. That's why market has increased hugely. And again, if you see on February 22nd, FIA has done huge selling of 8,295 crores. That's why there is a huge fall on February 26th. In this way, you can able to judge the stock market movement based on the FIIs and DIIs trading activity. But this FII and DII trading activity will not be updated in the real time. It will be updated either at evening 6:30 or 7 o'clock. It will be uploaded in the NSE India website. Later it is uploaded in Money Control website also. But how to find out the trend for the next day using the FIIs and DIIs activity? Whenever you are seeing continuously 2 days of net selling from both FIIs and DIIs, then stock market will fall for the next few days. Here you see from the February 15th there is a net buying, February 16th there is a net selling, and again February 17th also there is a net selling. So like this, whenever you see a net selling for any 2 days consecutively, then market will continue to fall for the next few days or next week. The same thing happened here on February 16th and February 17th. February 16th and February 17th stock market has fallen and the trend continued for the next few days. Here there is a huge buying from the FIIs on February 24th, but immediately next day there is a net selling. So you cannot decide how the FIIs and DIIs will move the market. You have to confirm the trend at least with 2 days. Next day you see on February 26th there is a net selling from the FIIs and DIIs. Immediately on March 1st also you just check there is a net selling. So whenever you see 2 days of continuous net selling, then again you have to judge like market is going to fall. But here on the next day, that means on the second day, it is very marginal. You cannot decide whether it is a buying or selling. Why? Because there is only around 69 crores of net selling available and market can go in any direction. Now on February 2nd you see market has increased and February 3rd also you see market has increased. On March 2nd there is a net buying from FIIs and DIIs of around 1600 crores. So on March 2nd market has increased so much. Next on the March 3rd there is a net buying from both FIIs and DIIs. So market has increased hugely. So after seeing 2 days of continuous increment, you can take your buy positions. But here you see on March 4th, there is a net selling from FIIs and there is a net selling from DIIs also. But on the March 4th, there is a small green candlestick. That means on the day, retail investors are buying hugely compared to FIIs and DIIs. Why? Why? Because market has increased hugely from the past few days and innocent retail investors continue their buying by seeing the market momentum. But what happens? As I already told, FIIs and DIIs have most qualified research team and they will predict the stock market movement depending upon various market scenarios and economic situations. Due to that, on March 4th they have done net selling and you see what happened on March 5th. There is a huge selling again and market has fallen so much. So if you see this kind of net selling on any day from both FIIs and DIIs, if market has increased on that day, then there is a scope for falling of the market for the next few days. Whenever you see FIIs and DIIs are selling, but retail investors, if they are buying, then you have to understand market is going to fall hugely within the next 1 or 2 days. The same thing happened here on March 5th. March 5th, there is a huge selling from the FIIs and DIIs, and due to that reason, market has fallen. So what you have to do as a retail investor? As a retail investor, you have to closely follow FIIs and DIIs. If both FIIs and DIIs are selling in the market, that is the right time to exit from the market from your positional trades. If you are investing for the long term, say for example 1 year, 2 years, or 3 years, then no need to follow this FII and DII trading activity. But either if you are doing a positional trade, if you want to hold a stock for 2 days, 3 days, or 1 week, otherwise if you are carry forwarding your options either CEs or PEs, then you closely follow this FII and DII activity. It will tell what is the market movement which you are going to get in near future. Depending upon that, if you are holding a CEs and if you are seeing net selling from the FIIs and DIIs, please exit from the CEs. Similarly, whenever you are holding PEs, whenever you see net buying from the FIIs and DIIs, then please exit your P's. Same follows with the futures also. If you are holding buy positions in the future, then if you are seeing a net selling from FIIs and DIIs, please exit from your buy positions in future. If you are holding short positions in the futures, if you see FIIs and DIIs net buying, then please exit from your short future positions. Understood? In this way, you have to analyze with the FIIs and DIIs data for the coming next 1 or 2 days. You have to do this analysis only in the weekdays only. Since March 5th is a Friday, you cannot apply this Friday data and you cannot predict how the market is going to move on the Monday. Why? Because in between 2-3 days of gap is there. Market might move in any direction depending upon the news and the new policies. I hope you liked this YouTube video about FIIs and DIIs analysis. If you like this video, please like and share to your trading and investing friends. Thank you very much.